When retiring, one thing that you can never avoid is being taxed. However, the nature of taxation is different wherever you are, and because of that, knowing how you're being taxed helps out in reducing your overall tax fees. The way taxes are being levied in a state is important to consider, especially if you're retiring. And today, we want to talk about the tax scene in Nebraska. From affordable living, friendly communities, quality healthcare, and low crime rates, Nebraska is already a good community to live in even before retirement. But we'd like to shine more light into why settling down there would be a good idea. This is Intelligentsia, real-life advice for practical and financial goals. Today, we want to talk about Nebraska's tax scenario, how it fares for retirees, and the implications for those affected. So let's get to it. Like many other states, Nebraska gets its income through various forms of taxation. This money is needed to fund different types of government services and public functions. As a result, the residents of Nebraska are taxed through different means, one of which is through income tax. For Nebraska, their income tax system is progressive, meaning you get taxed depending on your income and where you are in their income bracket system. This can range from 2.46% to 6.84% across different income brackets. The good thing for retirees, however, is that most retirement income like Social Security and pensions are only partially taxed. Social Security benefits are partially taxed for individuals with a federal adjusted gross income exceeding $43,000 for single filers and $58,000 for married couples filing jointly. Apart from Social Security, retirement income is generally taxed in Nebraska. That said, while Nebraska does tax a portion of Social Security benefits, there are exclusions for some recipients. How it's being taxed is based on the federal adjusted gross income, with the state also allowing a portion of Social Security income to be deducted for those under specific income thresholds. Other than that, talking more specifically about other retirement income, some sources are fully exempt from state income tax. Some of these examples are military retirement pay, railroad retirement benefits, and public pensions. Private pensions, however, and other forms of retirement income may be subject to taxation. That said, income tax is still a huge factor in deciding how you're gonna budget your finances, as that's money coming into your accounts. Now that we've talked about taxes involving money coming into your accounts, let's talk about money tax that's coming out of your accounts to pay for your day-to-day expenses. For instance, one of the foremost expenses that you'll be incurring during retirement are your living costs. Because part of everyday life in Nebraska is dictated by where you live, the first thing you have to think about is buying property in the state. For that, you'll need to think about your property taxes. In the state of Nebraska, property taxes are levied and administered by local counties. The tax rate changes significantly depending on where you live in a state, as it depends on the county and local school districts. There are, however, some programs that can help you if you feel like your property tax rate is too high. There's the homestead exemption program for qualifying homeowners, which helps reduce the taxable value of their primary residence. How the homestead exemption program works is that it reduces the assessed value of the homeowner's primary residence for the purposes of property taxes. It's designed to provide property tax relief, seniors and individuals with disabilities in particular. There will be more programs to be discussed later on in the video, as Nebraska offers multiple exemptions and tax credits for those who are eligible for it. While property taxes should be considered when talking about your day-to-day expenses, another thing to keep in mind is your actual everyday expenses. Groceries, leisure, prescription medicine, those are all things that retirees purchase regularly, and normally, all of those come with tax with some exemptions. Nebraska, like other states, is no exemption to imposing a statewide sales tax. Nebraska's state sales tax rate is at 5.5%, with local jurisdictions being able to impose additional sales taxes. Some items are generally exempt from sales tax though, like food and prescription drugs. Services are also generally subject to sales tax. That said, if your day-to-day expenses involve a lot of planning for you to be able to manage your finances, another important thing to consider apart from the present is planning for the future. Estate taxes are common at a federal level. However, Nebraska does not impose a state-level estate tax. They do impose an inheritance tax, however, that varies depending on the relationship of the heir and the deceased. While there are many different ways retirees can be taxed in the state of Nebraska, it's important to note that there are also ways to have your overall tax liability reduced. Knowing how you can get taxed is one thing, understanding the specifics of how you can be eligible for certain credits and exemptions is another. Let's talk about some exemptions and exclusions involving income taxes. For the case of Social Security benefits, they're partially taxed in Nebraska. There is an exclusion for a portion of these benefits based on income thresholds. However, this allows retirees more relief when it comes to receiving their Social Security income. Additionally, there are other benefits involving income. For low-income individuals, for instance, including retirees, Nebraska offers the Low-Income Home Energy Assistance Credit. This essentially helps low-income individuals to offset the cost of heating and cooling expenses. One credit that helps out with managing your household is the Property Tax Relief Act credit for Nebraska homeowners. Now, this isn't specifically for retirees, but it affects them too. The program is designed to help alleviate the burden of property taxes. The credit amount is determined on different factors like income and property taxes paid. Another important tax credit for retirees who regularly volunteer is the Volunteer Emergency Responders Incentive Act credit, which provides a tax credit for volunteer emergency responders. Volunteer emergency responders in this context includes firefighters and emergency medical technicians. Retirees who volunteer in these capacities may be eligible for this credit. Apart from volunteerism, there are also tax credits for those who are charitable. Nebraska offers tax credits for retirees who contribute to qualifying charitable organizations. This allows certain charitable contributions to go to a specific cause of their choosing while alleviating their overall tax burden, providing an incentive for philanthropy. For retirees who are still taking care of dependents, Nebraska offers the Child and Development Care Credit. This is beneficial for those who still have dependents, as this credit helps offset the cost of childcare services. Adding on to that, Nebraska also offers a tax credit for contributions to their educational savings plan. This credit is also beneficial for dependents as it helps set up a beneficiary's education savings plan while reducing the overall tax burden. This credit isn't specific to retirees either. And lastly, in regards to healthcare, retirees are also covered with the Health Insurance Premiums Credit that aims to assist individuals in managing costs associated with healthcare during retirement. Healthcare is a huge portion of a retiree's savings because as you get older, the healthcare required to keep you in shape like prescription medication, hospital trips, and other related expenses tend to pile up, and they get more expensive the older you get. This essentially offsets the medical costs that you'll be incurring due to the lesser amount of taxes you have to pay for. Nebraska has a lot to offer retirees who want to settle down in the state. It involves a combination of income taxes, property taxes, and sales taxes to make its income, but it also offers some leeway for those hoping to reduce their overall tax burden. There are various tax credits and exemptions to help its population alleviate their financial burden. And due to the tax environment, retirees can rest easier in Nebraska, from certain credits involving philanthropy and volunteerism to credits that help you raise children. The state of Nebraska offers many different exemptions and credits for all sorts of retirees hoping to make the state their home. The impact on an individual still depends on factors such as income, property ownership, and the nature of how their retirement income works. Knowing more about any changes in tax laws and consulting with tax professionals is key to optimizing their financial planning and making their golden years a financially relaxed phase of their life. If you've enjoyed this video and found this helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we're pumped to have you on our next video. Stay mentally healthy, and let's get financially fit together.